little closer to family. So that's where I am today. I attended college at Ouachita Baptist University, played on the golf team there at Ouachita, majored in business administration with an emphasis in finance. And growing up, I was always good at math. I liked math. As a kid, I knew a family friend that went through bankruptcy, and that really kind of grabbed my attention. I do genuinely care about people, as probably most of you do, and I began to have a desire to help people make good financial decisions. I began my banking career in 2006 at Metropolitan National Bank in Little Rock, and then in 2010 had an opportunity to work for National Bank of Arkansas in NBA. And then in December of 2013, Arvest Bank acquired NBA, and I stayed right there. So I've been in North Little Rock at our McCain branch for, 11 and a half years now. So I'm a neighbor of yours. I know many of the members here, and I'm just glad to be here with you guys. So.
Well, as you said, we're excited that you're here. So I always assume not everybody in the room knows what every terminology is. I know I don't, but what every lingo and what we're talking about necessarily. So can you take a moment and tell us what the difference between a personal loan and a commercial loan actually is?
Yeah, good question. And this comes up often just with general inquiries. So a personal loan has a consumer or some sort of personal purpose. A personal auto, a personal mortgage, maybe a home equity line of credit. So a commercial loan, something that might land on my desk or one of my teammates' desk, must have some element of a business purpose. Maybe it is to purchase an apartment complex. Maybe it is a builder building a spec house. Maybe it is a developer developing a subdivision. But at the end of the day, there is probably some level of profit that's expected to hit the bottom line, and that's generally going to define a commercial loan. It's defined by purpose.
Okay, I like that. So let's say we've got a business and someone's applying for their loan through that. Would you say are there three of the most important things to consider in your application?
Okay, so there are a lot of factors that go into a loan decision.
More than just three, I'm sure.
A lot of factors, but I'll give you three. First, the strength of the primary repayment source. How likely is it that we're going to get repaid from the cash flow generated by the business? Okay, and then second, I'm going to look at the secondary repayment source. I'm going to review the business owner's sources of income. I'm going to, do they have income outside of the business? I'm going to review their personal liquidity. What I want to know is, can the business owner repay me if the primary repayment source falls short? And then third, this might be surprising to you, I'm going to go with management ability. I want to know what's the owner's experience in the business. How about the experience of any other key management they may have on their team? Do they have a successful history of running the business? And I know we're going to talk a little bit about credit, so I'll touch on some things for maybe somebody that is a new business owner when we talk about that. But I do want to point out that notice that I didn't mention collateral, which is probably what everybody would have expected to hear. And collateral is a key component. Collateral is very important, but collateral is the tertiary repayment source. I'll give you a little inside scoop. On my very first day, February 6, 2006, starting as a credit analyst, training to be a commercial lender at Metropolitan National Bank, my boss, who was the chief credit officer of Metropolitan National Bank, the very first thing that he said to me is, cash is king. Wrote it down, and he said, we lend cash, we get repaid in cash. We are not a real estate business. We are not in the business of selling equipment. We're a bank. When we do something other than that, it usually doesn't end well. So cash is king.
I like what you're saying. So, because I've always thought a lot of times having a lot of assets, collateral would beef up the benefit. But as you say, you're not in the real estate industry. You're not in all these others. So you guys really don't have any interest in that, would you say?
Collateral is important, but we want to get repaid by the cash flow generated by your business. That's the most important factor.
When you use the term primary source, primary payment source, and secondary, primary being this is my business, this is the cash flow that's going to be coming from my business.
Correct.
What would be a secondary be considered?
So that would be the personal income or assets of what I would call the guarantor. If you're the business owner and you are getting a loan, you're going to be expected to provide a personal guarantee. So if the business falls a lot short or a little bit short, you're the one that's got to make up for it to make the payments and meet the obligation.
Got it. And so, that actually ties into business growing 101 of a lot of times, don't just jump off a cliff with your business idea, quit your day job, and just go wholeheartedly in this with nothing. Because what happens if this does fall short a little bit? What you're talking about is you might still need that secondary income of your 9-to-5 job until that rides up high enough to where it can easily repay all of your debt at that point.
Absolutely. If you don't have that, then you're looking at the collateral as the secondary repayment source, which is really not ideal.
It's not nearly as appealing to you guys. Okay. Is this helping anybody here? All right. I know it's helping me a lot. So you had mentioned one of the scariest two words to people, adults especially, credit score. What is there anything that weighs more than a credit score in your world?
Yeah, probably the three things that I just mentioned, but specifically, and I'll be repeating myself before this is done, but
sometimes repetition just breeds that much more impact.
Liquidity, again, back to the thing that my boss chose to tell me very first was that cash is king. The bank needs to have confidence that the business owner can handle their obligations if business does not go according to plan. Matt, I'm 40 years old, and in my 15 to 16 years in banking, I've seen the Great Recession of 2007 to 2009. We've recently seen the impact of the COVID-19 pandemic. And in both scenarios, obviously this one is more fresh on our mind, but like the flip of a switch, the economy and business can change. It can go the exact opposite way with little to no warning. And so whether we're talking about the financial life of your business or personal, you need to have liquidity. You need to have cash because there's a very good chance somewhere along the way.
It depends on a lot of times who you subscribe to, Dave Ramsey or Robert Kiyosaki or all these big names. Do you have any rule of thumb on liquidity or cash reserves? Is there something you guys have established as what is ideal?
You won't have too much.
You can never have too much.
I'll say that. You might. But it does depend. If you're borrowing $50,000 or borrowing $1 million, the expectation is going to be different. An amount that you might need to come into play to make up any shortfall in your obligation or your operating expenses.
Got it. I like this. So when you are borrowing, we're coming to you saying, hey, I've got this, I'm wanting to expand my business, or I've got a business. When you're borrowing, how important is it for us, the borrower, there's a term called an equity injection. First thing, explain to us what an equity injection is. Second thing, how important is that in your playing?
Yeah. So equity is the amount of money the business owner puts into the project or the purchase. The core of what we do is we lend other people's money. So we have to be stewards. We have to keep deposits safe. They need to be there when our customers come to make a withdrawal. We are not in the risk-taking business. Kind of like an insurance company, we are in the risk management business. We have to make good business decisions. We have shareholders that expect a fair return on their investment. And furthermore, as you likely know, the banking and financial industry is very heavily regulated. So we're fortunate enough that we've got Big Brother looking over our shoulder as well, holding us accountable. So at the end of the day, for a lot of reasons, we have to make good, sound lending decisions.
Got it. So your good, sound lending decisions. Like I said, I'm coming to you. Walk us through your entire, the loan process as a whole. Because if I'm extremely unfamiliar with this, and I come to you and say, Randy, listen, I've got the most amazing idea. It's about to be cash flowing $10 million a week, next week. And it's all, no, I'm just kind of joking almost. But walk us through the lending process on your end.
So generally it starts with a conversation. You're going to call me or you're going to call into the bank, and I'm going to visit with you, and you're going to give me a pretty good feel of what your needs are, and we'll take notes and all that good stuff. And then we're going to get you started with an application, of course. You're going to send that application, and with that, we're going to want you to send us some financial information, typically 3 years of tax returns, personal, business, if applicable, a personal financial statement, so you will list all of your personal assets and all of your personal liabilities. And then we're going to conduct underwriting and follow up with any questions that we may have or clarifications that we need. And then we're going to determine if the numbers work and make a decision. And if we know that the numbers work, then we can move on to completing due diligence on the collateral. Maybe we need appraisals. Maybe we've got to order title work. Maybe there's some environmental due diligence that needs to be done. And then you're progressing towards closing.
Got it. So the term underwriting has always been super vague to me. You hear it, but it seems like it's just a vague concept there. What exactly in your world is underwriting on a deal?
So commercial, I mean, we're looking at the income and we're looking at the expenses, and there's going to be a net income number. There's going to be a number that is available to service debt. So I know what your loan amount is. I know what terms that I can do. That's going to give me a monthly payment, an annual obligation, and the business with its net income and available cash flow needs to have a little bit more than what those debt service requirements are. So that's the gist of the numbers that we're going to be looking at the income that business has available to service the debt or all debt obligations that they have.
Got it. And you mentioned you determine the value of the deal or the kind of the cost, or what the deal is worth in your eyes. Is there a metrics you guys use or a ratio? If somebody says, hey, I want to buy this truck here for hauling stuff, do you have any type of ratios or numbers that you look at to determine things?
I think I know what you're saying. So we would call that as bankers a debt service coverage ratio.
Yes.
How much I have available and how much I have to service. Mm-hmm. So if the numbers are the same, that number is going to be 1.00. You want it, as bankers, we want it to be at least 1.2. That means you can cover the debt and you got a little extra.
So
you have a little
1.2,
cushion.
would that be roughly 20%? Or is that just...
Yes, basically you have 20% more cash available to service the debt obligation. So,
okay. And
so if you had debt obligations of $100,000, that was your total principal and interest, you need at least $120,000 up on the top.
Perfect. Okay. That helps me, so I hope it helped.
Okay.
I hope it helped you all out there. And let's talk we're still in the loan process. Typical turnaround time. I come to you, I've got this idea, sounds solid, you agree, you approve it. What turnaround time are we looking at here?
So it depends. If we're talking about real estate, then we have to allow time for appraisals and title work. If it's a commercial real estate deal, you're probably talking 4 to 6 weeks. From the day we have everything, from the day the appraisal order is triggered, you're probably talking 4 to 6 weeks to get to the finish line.
Got it.
Now, if it's not real estate, then and you're not messing with appraisal and title work, then the window can get a lot shorter. If we're talking about equipment, accounts receivable, inventory, the timeline certainly shrinks.
Got it. Awesome. So when we use the term commercial lending, like I said from the get-go, that's a super broad, pretty vague topic. Take a moment and tell us some of the more unique loans you've been approached with or that you have processed.
Okay, so one fun thing, maybe the most interesting thing about my job is the variety of businesses that I get to work with on a daily basis. One day I may be looking at an apartment project. The next day, a hotel. I may be visiting with a manufacturer, a distributor, a subdivision developer, like probably a lot of the folks in this room. I live in Lone Oak. There's farmers, so oftentimes we finance agricultural equipment. So we certainly get a variety. There's always going to be some uniqueness. Maybe one particular scenario that is maybe a little bit of a funny story is I do remember a time, and this was just a few years ago, working on a loan renewal, which is just an extension of an existing loan that has not paid off yet. I had inherited it several years prior. It originated in 1999, land loan, and the property just hadn't sold as expected. It wasn't a bad loan. It was a good customer. They had a lot of successful projects and a really good banking relationship with us. And the loan had paid down some over the years. But I knew my chief credit officer would point out that the loan originated in 1999 and that it hadn't paid off yet. And loan committee rolls around. First question, chief credit officer. I see this loan originated in 1999. When are they going to pay it off? And I responded, well, the loan originated my freshman year in college, so and everybody got a pretty good laugh out of that. All the loan committee members were older than me, so I didn't originate it. It wasn't my fault, and I got off the hook on that one, and shortly thereafter, the property sold and paid off. Happy ending. But so for you young guys right here, you may be inheriting some loans that people like me are originating right now, and you may be held accountable for them.
So in other words, you might be cleaning up our messes at one point.
Yeah.
Got it. Hey, and you mentioned a term, loan committee. I've heard this. It sounds pretty scary, a loan committee bringing you in and shaking you up a little bit. What is a loan committee in your world?
So loan committee typically consists of 6 to 8 voting members, usually your more experienced managers, loan managers in the bank. I serve on our loan committee. Some of our senior lenders, senior officers rotate on a quarterly basis, but most banks have a certain benchmark that requires loan committee approval. So you're going in there, you're presenting your loan, you're preparing the packet well ahead of time, which is why we have to pester borrowers for lots of details sometimes, because we want to be well prepared, and you got to get out there with a yes vote.
So who do you answer to more, a loan committee or the IRS or some auditing firm?
I work for Arvest. I answer to my loan committee.
Got it. And you mentioned the young people down here. And if you look around, we've actually got a lot of students, which is exciting because they are the future of this church. They're the future of this community. And let's say some of these young people, they get out of high school into college, and they've got a lot of ambition. But when you are young, you may not have bad credit. You just may have no credit. So what would you say to some of these young people here with an idea, with ambition, but they just don't have any credit?
So once you reach the eligible age, establish credit immediately. And I want to be careful because I'm not promoting getting into debt, but recommended options would be getting a credit card, getting a cash secured loan through your bank. If you're buying a vehicle, a wedding ring, something that maybe you're planning on paying cash for, go ahead and finance a portion of that. I like credit cards, but you have to have financial discipline. And if you're going to be a business owner, you have to learn financial discipline. Paul had to learn contentment. You have to learn financial discipline. So you've got to be able to handle a credit card. Use them for your needs, not your wants. Use them for things that are budgeted for. Use them for a tank of gas. Use them for groceries. And make sure you have the money set aside to pay the bill in full when it comes in. And so of these options, and there may be others, the key is to establish a satisfactory repayment history. If you don't have credit, you don't have bad credit. There's just nobody to speak up on your behalf that you've paid me on time every time for all these years. And once you have credit or you borrow, you pay on time every time. Pay on time every time.
I remember being a young teenager. Actually, I got my very first loan on a flip house from National Bank of Arkansas, so right where you started. Right. And the banker, I was 18 at the time, and he used the exact terminology of, you don't have bad credit, you've actually got great credit, but you just have such a low score. And he used the analogy of shooting free throws in basketball. He said, you're 2 for 2. You've got 100% percentage here. People would love that, but you're 2 for 2. What I want to see is someone who's shot 100 free throws and them in the 95% and so forth. Do you see there being much weight in having maybe a higher percentage but lower, like I said, in my situation, lower shots taken?
Yeah, you want to keep your limits lower compared to your availability because that shows that you have capacity. When you're going to get another credit facility, they don't think, okay, they're maxed out here, so they need, something else. And I'll say, too, that if you get a credit card, keep it. Keep it forever because it means a lot more to have somebody that says, you've repaid me on time every time for 20 years or 40 years. And, oftentimes somebody will get a credit card and they'll have it for 1 or 2 or 3 years and they get a promotion for a better credit card and so they close this and open a new one. Keep that old one. Keep it and use it once a month, if nothing else.
Okay, just to establish that. And then obviously, most important, pay it off.
Right, absolutely.
Don't let that accrue.
Absolutely.
I see. All right, so the first question I asked was, you're young, you've got ambition, but you've got no credit. Let's flip that and put a spin on this and say you have a business, it's a thriving business, it's going well, but due to some previous poor decisions, you may have some bad credit. How do you approach that when someone comes to you and says, I'm booming, I've got bad credit, help me?
Okay, we're going to keep it honest. We're going to keep it honest. You need to be able to trust a banker. So bad credit is a barrier to obtaining financing. I don't want to sugarcoat that. Now, in your scenario, if this business is thriving, that improves your chances. Remember what I said earlier, I'm going to focus on the primary repayment source first. So if your business is doing well and you're generating plenty of cash flow, that's certainly a good thing. We talked about the secondary repayment source and having adequate cash reserves. If you have liquidity, you have backup options, that can mitigate other risk, such as maybe a low credit score. If bank financing is not an option, then what other options do you have? Number one, you can look at seller financing, which I know you guys are probably familiar with. But if you're buying a piece of real estate and the bank can't quite finance it, maybe the seller can finance it. Maybe it's even tax advantageous, for them to do so. So that's also an option. Maybe you can find a qualified co-borrower. Maybe you can find a partner or two. You may have to share in the profits, but find a partner or two that has good credit. Maybe they have a relationship established with a bank. I've seen scenarios like that. You partner with a couple of individuals that have good management experience, they have good credit history, you get a relationship established with a bank, do a few successful deals together, a few years go by, you clean some things up, and then you're in a much better position. So you've got options, but it is a barrier.
Let's go back. You said something I like of seller financing. I often use the term owner financing. Let's say I found a project, they're willing to owner finance it. You may have originally declined me. I've come to you, said, man, here's an opportunity. You declined me because of X, Y, and Z. I go to the seller and I say, will you owner finance this to me? They say yes. A year later, I come to you saying, hey, this is owner financed. I've rented it out. I've sold it. I'm making these payments. It's cash flowing. This piece of equipment has tripled my business. Is that something at that point you'd be interested in or even consider refinancing?
Yes, that's an option. And what we should be doing on the front end in our first conversation is having really good communication, where I can provide a borrower guidance. Hey, if you want to get here, here are some steps maybe you can take. But that is certainly an option, and we've done that before, Matt. And whether it's a year or whether it's 2 or 3 years, the other thing that does is for the borrower, they've built a little equity in the project. That piece of real estate was worth this, and now they've paid it down some, and so maybe it's a more doable deal from a lot of angles.
Awesome, thank you. And so let's take a step back. At the end of the day, when do you say my efforts are making a difference? Because, we all get up, we go to work, you receive a check, we are compensated for our time. But when do you walk home and say, you know what I've done today is helped, it's benefited somebody?
Yeah. Financing ground up construction, that's always really rewarding. You see something new, new project, you know that it has real economic impact, you know it's good for the business owner, it's good for the employees, it's good for jobs. I'm kind of simple though. I mean, more than anything, we all like to be appreciated. So I think just when you get those heartfelt thank yous from customers, where you were able to help, you were able to make a difference, and you know that they genuinely appreciated it. And part of that too is you build relationships. A lot of the customers that I service now, I've serviced for 11 years or more. And it's very rewarding to have long-time relationships, people that know they can count on you and trust you, and I know that I can count on them because we've had a lot of successful deals or transactions in the past. It's also very rewarding to see businesses do well. When you get their tax return from the end of the year and they had a really good year. And a lot of times we get financials along the way, sometimes maybe quarterly or monthly, and we have a really good feel for how our borrowers are doing, but you're working hard with them. It is really good to see businesses do well, and it makes my job easier.
Earlier I was talking to Randy earlier this week and was trying to give him a feel for personal growth class. And so I went back a couple of years, and I've told him some of the people we had and that here speaking in this class, and that being our governor. We've had senators, we've had just wonderful business owners who have been extremely kind. And he, just walking in a little bit ago, said, hey, I'm not the governor. I'm not this big celebrity, big name person. I said, no, but you've got the money. You've got the most important aspect.
We got the money.
More than the laws, you've got money.
I don't know why I'm here, but we do have the money.
What is Zig Ziglar said, what's the term? Money on the gotta have scale is pretty close to oxygen. you gotta have it right there. You can't get very far without it. And so, but I just had a question come in, and I really like this. You mentioned tax advantages. Do you ever play in the world of helping folks with taxes? I know you're not a CPA, you're not in that, but do you do loans in any way in order to help folks with their taxes or to maximize something?
I mean, we don't give tax advice. We always have the disclaimer, hey, you need to speak with your CPA, about this. But very often we have customers that have borrowing needs because they have money that's in a 1031. They've sold something and they have a certain amount of time to reinvest it in another property. And so usually I have to hurry up and get a deal closed before that deadline runs out. So, you do have things like that, and you learn some things, some things to suggest, or maybe just, tell a borrower to maybe be on the lookout for, hey, you might visit with your CPA about this.
Got it. So let's talk for a moment about this concept called a business plan. Some of you may have known, I got my bachelor's degree in entrepreneurship, business management, and I was well educated on the importance of a business plan, how to build one, how to craft one, how to make it appealing. I get out in the real world, and personally, I haven't dealt with them a whole lot. So I've got the textbook on it, but a lot of real world experience with one. How important is a business plan? And for those of you who may not understand, a business plan is your guide map. It's your blueprints for how you want to craft your business, how you want to start it, how you want to grow it. These things can be extremely in-depth, very detailed, and so they can be as thick as an encyclopedia or a couple pages. So in your world, have you dealt with business plans very much, or are they much of a factor in what you do?
For a startup business, I would say that a business plan is certainly, maybe a little more expected. Maybe if you've got a really large expansion opportunity, maybe. I don't want to read 100 pages. I'm a diligent, thorough guy, but it doesn't have to be.
Give you the comic book version?
It doesn't have to be that. Some of the most important items, if you were just coming to apply for a loan with me, number one, we need financial information. I'm going to ask you for your last 3 years of tax returns, whether that be business, personal, both. Business, if that's applicable. I'm going to ask you for a personal financial statement, which again, I would say whether you're borrowing money or not, that's a good exercise that everybody needs to go through, listing your assets and liabilities, especially if you're married. Sometimes one spouse takes care of all the finances and the other doesn't. But this would list your bank accounts, your retirement account balances, the value of your home, how much you owe on your home, how much student debt you may have, the amount of you owe on your automobiles, your life insurance, who the beneficiaries are. So personal financial statement, very important and a very important part of your planning. And then also financial projections. Show me the income and expenses that your business is expected to have. And one of the most important things would be just to identify the use of proceeds, loan and equity. Everything that needs to be paid for or purchased, give me a breakdown. Is there a certain amount needed for equipment? Is there a certain amount needed for supplies, inventory? Do we need a detailed construction budget? how much does the land cost? How much does the building cost? If you're a startup, do you need 6 months worth of operating expenses? You got salaries, you got to pay rent. What are your expenses, and how much funding do you need until the income or the cash starts rolling in? And then the other thing that I would say is, one of the key things we talked about was management ability. Provide a resume. Provide a resume on all owners. Provide one on any key managers. If you've got a decent sized business or a number of employees, or maybe just somebody that you're leaning on, include your resume. List your educational background, your work experience. Maybe you've worked a job in the industry, that you're looking to start your own business in. All of those things, I would say, it doesn't have to be 50 pages. You don't have to list your objective and all of that stuff, but those are the key components. And by the way, I've got all of this written down. I'm happy to send it to you.
Oh,
I don't know
awesome.
if you've got an email, a distribution group for your class, but I know it's probably hard to jot all this down on the fly, but I'm happy to send it to Matt for anything y'all can pull out, whatever
Yeah, and
you
I'm
want.
actually glad Randy mentioned that. We have a church resources page. The plan is we are putting all of this on a resources page for the land class. So absolutely, we'd love to get that so people can go online, pull that down, and get it. You mentioned something, and we're kind of going off topic here just for a second, but you mentioned resumes and getting to know the people, their talents, their abilities, their history, their experiences. How much weight do you put into that versus, and I'm going back to just the dreaded credit score, or is there sometimes you can say, okay, they might have a mediocre, maybe questionable number, but they've got a lot of experience and a lot of talent in this field. Is there a time where you actually have the ability to tip that one way or the other?
All of those factors are important. Management ability is really important. But if the business owner doesn't have the financial discipline, they need to find somebody that they can lean on that will. It's like a husband and a wife. We very rarely have the same strengths, but where I'm weak, my wife is strong, and where she's weak, I'm strong. So, you got to have somebody that can watch out for the finances.
Yeah, true. I like that answer because, like you said, if you're weak in that aspect, find someone who is that you can leverage that and that can pull from. Good answer. Thank you. And we're wrapping it up here. I did get a question text in, and you had mentioned equity. What was the term you had said? Equity injection. Is there a typical percentage you like seeing people putting into a loan beforehand, or does that vary based on what it is?
Yes. Be prepared to make a down payment. I would be doing you a disjustice if I told you don't expect to make a down payment. It does depend on the type of collateral or maybe what you're purchasing. If it's a building of some sort, a residential investment property, the standard is we might finance up to 80%. So 20% equity injection from the borrower. If it's something like a subdivision development, it's more 75 loan, 25 equity. Raw land, a little harder to liquidate. We're going to scale it back. We may finance up to 65% and then expect a 35% equity injection there. So it does depend on what you're buying, but I would say just about whatever you are doing, you probably need to have at least a 20% figure in mind.
Got it. And we're down to the final question. And let's say, what are some steps to help people qualify for a loan? Are there things that they can be doing, whether it's these young people, someone starting a business, someone growing theirs? What are some things they can do to help them qualify?
So number one, start small. Borrow within your capacity. If the worst case scenario hits, with 100% certainty that you can repay the obligation. And, we've got postseason baseball going on right now. Not everybody has to hit grand slams, okay? 5 or 6 singles in a row can score 3 or 4 runs just as easily. And second, I would say build your reserves. It is always, as we've talked about, just having liquidity, excess reserves. That certainly makes it easier. And we were joking in the back there with Joe. The more that somebody needs money, the harder it is to get it. It shouldn't work that way, but you do need to build reserves, and that goes into the equity requirement. If you do need to be prepared to make a down payment, so you've got to be saving. You've got to be putting a little bit back.
And we got another question text in, so it's pretty simple though. What geographic locations do you loan in or do you cover? How far do you reach?
So my bank, Arvest, is located in 4 states. We're in Arkansas, Missouri, Oklahoma, and Kansas. Although I'm in North Little Rock, and North Little Rock, the Little Rock metro area is my home turf. I've made loans in Missouri. I've made loans in Oklahoma. So those are typically, now we do have lenders in those markets, but if for whatever reason I have some relationship or connection, then we'll venture out into those areas. I would say that typically we're going to require that either the borrower or the collateral be within our footprint. One of those is at least going to have to be the case, for us to be real interested in it, and it kind of, be in our lane, so to speak.
Awesome. Well, Randy Sutherland, we thank you. That's what we have for today. And so we've got to thank you for coming. We've got a book for you.
Thank y'all very much.
He's never seen this before. Have you ever seen this? I have not. Okay, I'm not lying to you then. He's never seen this. A couple years ago, we took a semester of the Truth College personal growth class. The semester was so good, we actually transcribed that, turned it into a book called The Hebrew Secrets. That's a gift. We want to thank you for coming. Appreciate it. That's it for tonight's class. Next week, we are diving right back into the land. I don't remember the topic, but it's going to be another good one. We'll get the info out to you. And so you are dismissed. But hey, before you get up, we want to say, what better way to celebrate Big Monday night on your birthday than right here? And so make sure to wish Sister Amber Biggs a happy birthday. I won't tell you what decade she is celebrating, but it's a young one. All right, we got basketball class starting soon.